Well, hello, Mavericks. This is the US Payrolls class. We're going to be trading it live. Here we are on June 2nd, 2023. All right, let's start off with expectations here. So the expectations are for a job gain of somewhere around 193,000. But the one thing I wanted to point out is take a look what's happened this week. On Wednesday, we had job openings much stronger than expected. Supposed to come out at 9.4 million, 10 million. Much stronger than expected. Then we got ADP. Supposed to be at 173, comes out at 278. And in this manufacturing number, the manufacturing number was weak, but the hiring number was actually fairly strong. So everything this week dealing with employment, it has actually beaten the numbers and beaten the numbers soundly. Now that doesn't mean that's what we're going to get with the payrolls report. I've seen times where ADP report was super strong and then the payrolls report was weak and vice versa. However, we can see that the overall trend is that employment is still strong. So I'm looking at this number of 193 and I'm thinking, okay, I think if anything, the risk is that this number is going to be much higher than 193. And the question is, what does the market do if this number comes out at 250, 270? What does the market do and what does the dollar do specifically? So that's exactly why we're meeting today, because we're going to talk about all the possibilities, and then we're going to talk about the currency pairs that we're going to be targeting, and then we're actually going to go out and throw out some trades on those currency pairs. But let's go through how to trade news. I know that you're all familiar with this, but I always think it's very key to go over this again and again and again. Trading news is the most rewarding and riskiest thing you can do in Forex trading. This is where, again, there's a lot of the risk, but a lot of the reward. So how do you play these reports and not lose your shirt? Well, the first way is entering before the trade. Now, entering before the trade is the riskiest, but it also is the most reward. We like to do pyramiding or legging in, where you take small positions at first before the announcement. And then if it goes your way, and as it goes your way, you start to add on and layer on until you get a very large position in the end. This is the strategy I'm going to be using today. I'm going to be entering before the news, but I'm going to be entering before the news with a 1/3 position size. What that means, if I was going to buy 3 lots, that would be my normal trade. I'm going to buy 1 lot, and then I'm going to have a stop that is 3 times larger than my normal stop would be. Hopefully you can see that that's going to give me a whole bunch of cushion for when the report comes out and we get sometimes that freak out. Then we're going to be able to react. You can enter on the news where you have orders out there and they get triggered when the news happens. We're going to talk about the risks of that. And then you have your second stage where you let that initial move happen and then you enter after the real crazy trading and price action is done. Here is the biggest risk here of trading news. It's called slippage. So let's say that you were short and you put in a stop here at 183.10. It could blow right through this order. Remember, your stop order doesn't guarantee a price. It basically says, when it hits this price, get me in line to get out. Where you get in line will determine where you get out. You might not get out until up here. That's very possible in slippage. The other thing we like to watch out for is the whipsaw. The whipsaw is common, where you actually get in. So a trader says, I'm going to get in here. And then all of a sudden, look at that candle. You put in a stop. That long trader got stopped out if you wanted to be short on this trade. A short trader got knocked out. As you can see, everyone got knocked out for a loss because of whipsaw price action. If you're going to be trading news, you cannot have stop orders that are too close to the current market price, because you may as well just flush your money down the toilet. We know there's going to be a lot of volatility on that announcement, so you cannot have stops too close because of the whipsaw. It will get everyone on this. So we're going to be doing a trade entering before. I've already kind of pre-built this, so let me walk you through exactly what I'm looking at here. I'm going to pull up TradingView and we're going to take a look at the dollar specifically. So the first thing we like to do is we like to take a look at the daily chart. And here we see the dollar is has come up and bounced off of its resistance up here. This is our dollar basket. So this is the dollar versus the 7 other currencies equally weighted. I'm going to click here on weekly, and you're going to see that the dollar is down about 1% on the week. So for the week, the dollar's down 1%. But on the daily chart, you can see that we have run up, hit our head on resistance. Ultimately, this stock is going to be, until it breaks out above this level here or below this level here, we have to call it sideways. But the big question is, we're looking for a trade for today. So what is the best trade for today? And you can see that we are heading into this area of support. There could be a little bit of support here. I'm looking for a hotter than expected report, which means that I'm looking for a long dollar trade. So the big question is, what do I trade that against? And if we take a look at our currency baskets, as you can see, the yen is very weak. I think a dollar yen trade could make a lot of sense. The euro is, let's call that sideways. The Swiss franc is also looking a little weak. So you can see Swiss franc here coming down to the bottom of its range here. Pound does not look weak. CAD does not look weak. Aussie does not look weak. Kiwi, okay, has looked weak, but we're getting that little bounce here. So ultimately, when I'm taking a look at this list, if I want to be long dollar, I really have to be long it against either the yen or the Swiss franc. And I'm going to come in here now to a 4-hour chart. Actually, let's go to a 1-hour chart. I want to get, what's the weakest right now? So as you can see, yen is still weakening, EMA going down. Swiss franc looks even weaker here. So I am looking at dollar Swiss franc. So I'm looking at a long on dollar Swiss franc. And again, I'm going to be getting into this order beforehand, but I'm going to be entering with a third of a regular position and a stop that is 3 times larger than it normally would be. Here is dollar Swiss franc on an hourly chart. You can see sideways here, had a big run up, and we pulled all the way back down to this range. But you can see the momentum has turned. We're getting the EMA has started to turn up. RSI has started to turn up. We've got a parabolic SAR. So we have enough things telling us, okay, the momentum is possibly going the other way. Now, if I was looking to put a buy order in here, so let's just put in this buy order, 90.59 is the current price. The question is, okay, where would I put my stop? Now, whenever I trade news announcements, I'd look around and say, okay, where is some support? There's some support here at 90.35. But remember, I want to have a very, very wide stop on this. And sometimes you can't always find exactly where to be. Maybe down here at 90.20. 90.20 would be a decent place. But for me, I use the rule of I risk about 0.3% for news announcements. So if I'm risking 0.3%, I need to times that by 3.9%. So I'm going to have about an 81 pip stop. So that's going to put me right down about 89.80 is where my stop is going to be. So I'm going to go ahead and attach this. So I've got a stop order, and I'm going to put it here at about 89.80 is where I want my stop to be. Come on. Cooperate with me. I'll just come down here. All right, so I'm just going to go and change this to a market here just to get us in. So all right, so the entry is somewhere around 90.62. Oh, wow. We cut that very close to the number. Oh, boy, I'm sorry for that. I thought I had a little bit more time. News is out. News is out, and you can see initial move is dollar to the upside. Dollar to the upside. So look, this is where now we've got things going our way. Remember, legging in and pyramiding. What we want to do is we want to add to winning trades, trades that are going our way. Look, right now this trade is up 10 pips. Big deal. What I really want to see is I want to see a trade that continues to go my way and break certain levels. So when I look at where I want to add positions possibly, I want to look on the chart and I want to see, okay, where are some levels? Where are some key levels here that if we broke, that I would want to say, hey, that's another confirmation that that this trade is working our way. So I was able to draw a little line here. You can see we had a little bounce here. Came down, had a little bounce, ran up, found some more support in here, broke through it. This turned into resistance. So for me, I'm saying, hey, you know what? If we can break up through this level, I want to buy another 1x, or sorry, a 0.3 position. So a third of a position. So that is going to be a stop order. So I'm going to put a buy stop order right above this area. So this is basically saying, okay, I want to take another position when it gets up above 90.98 is where my order is. And then ultimately you can go ahead and build this out even more. You can say, okay, the next level that I want to buy more position at could be all the way up here. And you just simply come up here, put in your buy stop. You can just pre-build these to where everything's built out for you, to where things just trigger once they get to this level. Now, the one thing you do have to do is, once you take another position, we are going to have to adjust our stop. We have to adjust our stop to where we don't have too much at risk. So this is just some math. When I take my next position at, right around 91 here, if it gets up to that point, I need to then move up my stop and account for my new position size, which is a 2/3 position. And once I get triggered up here at 91.50, I have to do some math and say, okay, where is basically 0.3 below that average cost? And that's where that stop's going to be. So until any of those things hit, I'm very, very happy just to sit here and watch this trade. So you can see not a great reaction, but slightly positive reaction. Let's pull up the numbers just so we can see what the numbers were. Holy cow, 339,000 jobs created. However, the unemployment rate dropped. Here, let me pull down for everyone. You're probably looking at it already, but so this is, again, it's a mixed bag. It's definitely stronger than expected, but this unemployment rate going up is what the market does want to see. So that gives the bulls a little bit of something to say this wasn't a terrible report for bullish trades, but this pretty much tells us that the Fed is likely. We are already about 65-70% likelihood of the Fed raising in the next 2 weeks. This is probably going to move those rates up even higher. So we definitely are looking for more Fed rate hikes, which is likely going to push the dollar a little bit higher. As far as the price action goes, we've got a very muted price action. Let's take a look around the other currency markets and see if anything else is moving substantially. Here's yen. Boy, yen's not moving substantially. I was wondering if Aussie was going to come off its high. You can see it did for a short second, and we're back up to being strong. Kiwi, nothing going on here. So ultimately, this is a muted return or a muted movement after this news. But I do like the breakdown in the Swiss franc. So the dollar, yes, strengthened a tiny bit. Actually, we've given that back. But the pick we made correct is Swiss franc weakening. Swiss franc is weakening. This looks like it's going to be the thing that helps our trade the most. All right, well, that breaks down this trade. If you guys have any questions, let me know. You want to take a look at any other pairs, let me know. This is where you get into positions. We have no idea what's actually going to happen. We have no idea whether we're going to get these other positions filled. The market's going to do what it does, and we are going to do what we do. And we're simply going to trade the market in front of us and follow the plan and follow the system. And at the end of today, this is a, boy, excuse me. Over the weekends, my rule is that I will hold risk off trades over the weekend. Meaning that if something bad happened over the weekend, if you were something like long yen or like short Aussie dollar, that would be a risk off trade. I hold those over the weekend. I do not hold risk on trades over the weekend. Like I'm never long Aussie dollar over the weekend of any size in case something bad happens. Dollar, Swiss franc, two currencies of safety. You know what? I think that you could hold this one over the weekend. I don't think there's really much risk on this one. So if you do want to hold this one over the weekend, I think this one is one that, as far as the risk profile goes, it would be okay. Ultimately, I always like to maybe half positions over the weekends. Just if you do want to hold over the weekend, you half it on Friday near the close, and then you throw it back on Sunday a couple hours after the market opens up and the spreads are decent. That's kind of what I do on these trades here. All right, I don't see any questions, don't see any other pairs people want to take a look at. So thank you so much for joining me. This is always a fun session. We get to trade the market live. We get to see what it does. And look, sometimes we get this big, exciting move and we catch the right side, or sometimes we get stopped out. This one, it's what it is. We're up a whopping 2 pips here. That is a lot of excitement. So let's hopefully everyone has a more exciting weekend than this trade has been so far. Ultimately, I think with that number, could cause the dollar to move, but it's just, I'm a little surprised that the dollar is not a little bit stronger off of this number. This number is a pretty big dynamite number for these markets. Okay, well, that's it for me. Thanks so much for joining me. Everyone have a great weekend. Take care and happy trading. Goodbye, everyone.